I'm in Paris, but let's talk about a big lie in investing. This is what it is. It's a big one. Most people think that buying a foreign or international fund means that they're safe, global and diversified. But here's the truth from a Parisian cafe. Your international fund probably holds 40% in Japan, the UK and developed Europe. And the same sectors, tech, financials, energy. It's like ordering French wine only to find it's bottled in California. Want real diversification? Have you got the courage to try Latin America when the US is tightening, or Indian equities when European GDP is flattening, or small cap ADRs tied to local demand, not global exports? Well, there's the problem. You outsource it to an IFA or a wealth manager who sound like they're experts, but in actual fact are charging you so much in fees, they earn more than you ever do in growth in your portfolio. Instead, it's time for a little bit of education. Have a look at the links in the bio. There's a ton of free resources, from books to giving us a call to online courses, all for free. Or look at alpeshpatel.com/links. Invest globally, but with your eyes open. The Eiffel Tower looks pretty from a distance. The market doesn't. Don't confuse labels for logic. Global investing is not smart diversification necessarily. Like I said, the link is in the bio for real global picks. This is educational content, not financial advice. Investing involves risk. Always do your own due diligence. Well, thank you.